There we go. Okay, if somebody just can tell me if it's working on YouTube, send me a message. Yes, I have boosted my stream to 1440 because I know some of you were saying you can see it better. So now this is at 1440. If you can see it, then that's it for me. Okay, let's start. So yeah, so we'll keep the questions there, but we're gonna hear Heather, and if anybody else wants to jump after her. So how you doing, guys? I'm doing this session. I'm trying to go through some of your bad trades, see what you guys did, maybe see what happened, analyze basically the trade. I want to analyze everybody's trade, see why did you decide to get in that trade at that point, and we'll figure out if it was just bad luck that you had a good trade plan and it didn't work out, or it was a bad trade plan from the start. So let's start with Heather, and then if anybody wants to jump in, I'll be glad to help you too. So you have the mic, Heather. Let me know. We can start.
Sure. Do you want me to just like pick a trade I did and tell you like the time and the date and stuff?
Yeah, let's go through that. Yeah, like a trade that you did. Let's start with the worst of trades you
The
have.
word
Yeah.
I picked a few, but it's interesting. So I just started using that Trader Sync journal, and I haven't really dove into it too much. But it's interesting because you can click on the trade and it puts it on the chart and it shows you like where you bought it, where you sold it,
Yep.
and how much you lost, and all those things. And it's, I feel like, I've been started trading like maybe 5 or 6 years ago, but only really started since I, discovered Ricky's channel, maybe like November or so. So I really started getting into it, studying a lot. But I feel like I'm just not good at scalping. I feel like my entries aren't good, and then I just end up holding it if it doesn't go in the right direction. And just looking at these bad trades, it's like, oh my god, I'm like so stupid. Like it's not good. Or I tend to get in when it looks good, but as soon as it starts going red, I bail on it, and then it starts going up. And I kind of realized over the past like week or two that my lot size is too, I blew my margin account twice. So I went back to a cash account, and, I think that allows me to not overtrade as much and just the smaller lot sizes, because I was doing such large sizes, 1,000, 2,000, 3,000 shares of stuff. And then just a little bit in the red, I freak out, as I should, because I shouldn't be using that much money. But, the other day that, when I did pretty well, I used, smaller lot sizes. I picked my stop loss, which gave it like a little breathing room. And then that, I think, allows me to kind of stay in it a little longer. But yeah, so I trade. This was like one I did. It was just like I was in and then I got out, but and then it ended up going up like a couple of candles later. It was RUM, RUM, January 24th at like 12:20.
Let's see if I don't think I'm gonna be able to. January 24th. I think I have to do it daily.
If I can I post a screenshot in this chat? No. Can you see it on the 1 minute or no?
I doubt it's gonna be too far out. It's gonna be hard to.
I couldn't see if I got another one that was more recent.
I think it's here. So the thing is that there's no dates here either, so it's kind of crapshoot.
Let me see.
What are we at? 6:40. I think it's this one here. Okay. And now I'm gonna do it. Let's see if I can catch it like that. Yeah, for some reason TD used to have dates. No, they kind of don't do it like they used to. So I guess it's this one here.
Yeah, was that like 640?
Yeah.
$6.80 or something?
Yep. So that was on Wednesday. So I believe it's this here.
23rd.
So probably it's this one here.
Yeah, it was going up.
So I would say it's here, right? So this one here.
Yep.
That's the one we're looking for. So right here, I would say this one. If I'm not mistaken, that should be it. Even that this is January for some reason. Do you remember what did you buy that by any chance?
Yeah, it was like, oh, I know what it says. Yeah, like 644.
You bought it at 640. So you bought it when it was going up or when it was going down?
When it was going up.
Okay. Trying to figure out if it's this Wednesday.
Good example. It's more of like I just got in it and then I got out of it because I saw a red candle and then it went down a tiny bit and then went up a little bit.
I'm trying to debate which date is it because it was a Wednesday, so I'm trying to see. Yeah, so let's see here.
It was a Tuesday.
Oh, so it wasn't the 24th? It was a 23rd. Okay. Oh, okay. So it was right then. Okay. So yeah, it was the right one because I'm looking. It says Wednesday, and I'm like, what? Why is it showing Wednesday? Okay, if that makes sense then. Yeah. Okay. If that's Tuesday, then it's this one here. So we got it. Okay. This is your trade right there. I don't know how did you lose on this one, honestly.
I know, that's what I'm saying, because I got in and I don't think I got in at the right spot.
So where did you enter? Like, do you know what time you made the trade?
12:20.
12:20.
It was right on a pullback, like the first red candle.
Like right here.
That's it, yeah. I think that was it.
Okay. So if we entered here, that's actually a very good trade. I don't know how, because even here, you never even tested your entry again, basically. So that was a good one. You waited for a lot of pull. Like this one was going. I know I can see it on the 1 minute, but just I can tell like you were going here, and then you had like a very nice pullback, and it seems that you're holding this trend. So this was a.
I missed that pullback. I got it on the second one.
Yeah.
But I got in like at that first green little candle maybe, or that red candle.
Yeah, you probably entered like I think you entered like here.
Yeah, it was
this is the one.
Green candle.
And you got out from this one, the one after it?
Well, I got scared because I had too many shares. I had 5,000 shares, and then
5,000 shares.
Yeah, I know. That's the problem. I can't do that.
Yeah, you definitely can.
Because then it goes down a little bit, and the entries wasn't good. So that's the
So I
big
mean,
thing.
at 644, that stock it dropped all the way to only 627. So you probably lost like 20 cents. So it wasn't a lot. Like probably you were down like $1,000 or something.
Yeah, ended up 330 I lost. So I only got out like pretty quick. But it's like, should I have waited? Like I thought that was a pullback. It was going up.
So here's the thing: if
You
I was
know,
trading this, okay, I mean, you had a good entry, but if you're looking here, I know it's hard because it's a 5 minute, but I mean, it should give us the same exact thing. So if we were looking here, even that this, like you were testing this trend with the 13, and that trend kind of held. So even when it tested here, your better entry would should have been here. But even if you entered here, at least you should have waited for the break of the trend. So even if you took the wrong one in,
yeah.
it should have been at least to here or to break of that. So you should have known that before you enter here, and that should come also as your position size. So you know that, okay, I'm gonna enter here, and I'm risking all the way to here. So this is my risk. And then what you should do, you should know your risk and then multiply this by the shares, and that will give you an idea. So you're not emotionally invested in it. So you know that, you know what, if that stock doesn't go my way or that trade doesn't go my way, then what's gonna happen is that I'm gonna lose this much. So a head start before it even gets there. So that's gonna be the problem that you have there.
Right, and I only started really drawing trend lines myself after watching one of your videos like, a month ago, and that's like helped amazingly because if it breaks the trend, I just get out.
Yeah, and whatever and however you're playing it, so it doesn't, because this one had a trend, but I mean, let's say you're playing just a pullback, and you know that the pullback normally it's a pullback based on something that you see, or it's gonna be building support for the first time, like either one of them. So if it was building the support, you could always wait for the support or just take the risk for it. It just depends also, because sometimes, you know what, we play the trends, but let's say you're deciding that you've been watching it, and let's say this happened here. Okay, you're waiting for the trend and you decided to enter on the trend. This could happen too. So there is a bit of luck involved in it too, like that this time is not going to be the time that it tests and breaks through. That it's going to test and go again. I mean, a good
Was
example for
there
us,
like
a good example
period
was this one.
time
Yeah,
prior?
yeah. A good example was this one that we played, or you played, guys. I didn't play, but I mean, you had Verb. So this is a very good example too. Tested it, tested so many times. On the 1 minute, even looks better. So we could do a 1 minute on this one. But look at that. He tested, kind of went under it one time, and it will go up, up, up. And I bet a lot of people entered in here thinking it's gonna test and go again, but this time it failed. So yeah, sometimes it's gonna happen that it's gonna go your way, and sometimes it won't. So even if you do it, the whole idea is you're trying to do the right thing. If it doesn't go your way, then but you had the good idea, that's what counts. Because sometimes we have the good idea that it's gonna do something and it doesn't. That's okay. But if you did the wrong idea, like you had the wrong trade plan, and it didn't go your way, we know why it didn't go your way. But if you had a good trade plan and it didn't go your way, that happens sometimes. So don't blame yourself for that. So it's always about planning the trade ahead of time. So even this one, I
Right.
was telling you guys, it's a good one because it's tested, but this break could have happened here. The stock was already up like what, 200, 300%. Nobody knew it was going to go to 500. So always have that in mind too. Do you have any one, again, like another recent one? Let's look at a recent
Yeah,
one.
you had one from Mar
What stock?
IMRN March 7th.
March 7. Yeah, there is March 7 right there. Okay.
I think that was after hours. 5:13.
Oh, you got way up there, huh?
Was it after hours? Yeah,
Yeah,
7:15. So it was after hours.
you went after hours? Yeah, at 7 o'clock? Okay, that's 5 o'clock. What was that? Yeah, so that's Eastern time now. I'm back on Eastern time for the charts to make it easier for everybody. So I guess the market closed here. You entered here at 513.
So I entered on the pullback down to like the previous high, pretty much.
Oh,
And then I thought it was going up because there was a little red candle and then green, and then it went down at 7:13.
was that news? Like it popped like that? Was that news or just a pump?
I don't know, but I saw it go making higher highs, and then it was right where that green and that pink candle is.
Because the thing is that I spoke about this before. If you see this, okay, look at that. This is like front, like this is all front loading right there. So somebody was front loading right here. You can tell from the volume, even when it went up, it didn't go up on heavy volume. Like look at the volume here, and then this one, and then compare it to this one. So this one dumped. Basically, the volume came in here. That's when everybody started jumping in. The poor souls that jumped in, and that's when they dumped on everybody. So that's why I don't like playing these ones, especially when I see these. I normally tell you I short. When I see these, I short because this is not enough volume to make this big of a move. So it jumped from here, from 450 to 7. I mean, that's a massive move. Okay, on nothing. This is thin air. And this here too, it shows you that somebody was buying still here. Like there was some buying going on. And if you compare this volume here, that's 20,000. Look at the 20,000. This is 15,000. Okay, look at the difference between this move and this move. So this because it's after hours. You don't have a lot of volume. It's probably, I think Iron is a low float probably. I don't remember. Can't tell, but it's probably a low float. And that's what happens with these. So that's why you never should play these unless there is news and you see continuation of volume. So don't just, this is basically a jump in, and then when you see this, the run is done. You can tell like right away that wasn't even worth coming back in because you didn't see any, like none of these candles is a confirmation. Like I don't see a single one that's indicating that the stock is gonna reverse. Like every time it tried, like it tried to reverse here, down, reverse, down, reverse, down, you know. And every reversal is just going down. So that you didn't have a single one here that's showing you anything. And that's what happens. The volume dies out and the stock just drops even harder. Like it dropped even below the pump. So the pump started here and it dropped below it. And this happens 90% of the time with these stocks. So be careful playing these too. It's not just like, that's why I don't touch these after all. Unless there is news and I see the stock like I see something like this. Like this is volume coming in, the volume is increasing, and there is a move into it, and it just keeps continuing to move. And I see a move, then I can take a risk that maybe, yes, I'll take an entry close to support that I see or something, I'll take an entry. But when it's just like that, rocket ship up, and then you have this big candle here, this indicating that everybody sold that headed in early, because this is just basically all selling. You had no buying, and the stock just dies out. That's what happened. Alright, let's go to the next one. So this was a bad trade. This I can't. Like it wasn't even your size or anything. This was strictly a bad trade, bad time to trade it. So it was the whole thing was bad.
Okay, how about AISD from
Oh, allergy.
March 5th. I think it was after hours, 1647.
I think it's right here. Yeah.
So I got in right at 1647. So it was, going up. I waited for the pullback. So it was like green, pullback red, and then it dropped.
$16, you said?
Yeah.
What? Is it March? You said March? When?
So it's March 5th.
16. I don't see this. Did those stock go to 16?
The time, 1647.
Ah, okay. I'm like, my bad. So what was your entry on March?
The entry was at 674, and then I bought it 680.
Okay, this is March 7 here. 674. So this is March.
March 5th. You're on the 5th.
No, this is 7. That's March 7. 674.
No, it's March 5th.
Oh, 5th. Okay. It's 6. Okay. This is here. Alright, so this is, I guess, the day we played it. Okay, after
That's
hours, you
seven,
entered
so it's not
674.
happening.
Oh, you got it. So you got in that pump and dump quick one, huh? This one,
Right, but
basically.
it's like I waited. It was going. I waited for a pullback, and then it dropped. So I don't know, like what.
But
I
again,
missed or
that's why I don't like playing these after. Like I'll play in pre-market. That's fine, because pre-market, yes, you will have the volume sometimes. Like over here, you had the volume a little bit, and then I know that when the market opens, we're gonna get more volume, and it's either gonna go away or not. But when the market is closed, I mean, you're only getting less than before what we started in the market. And also, you had the same problem again. Look at these candles. Big candle, big candle. That's two big candles in a row, especially these. That's these are the ones that worry me right there. So small volume compared to earlier volume, and then you get the big move, and then yeah, it can continue. I seen a lot of these run after hours, but most of them do not. That's why I stay away from these. Like you never see me like I used to run after hours trades, and now I don't even bother with them because then you get these, and that's the problem. The problem is that dumping after hours is so fast, even worse than pre-market, because the volume is actually less in after hours than pre-market. So pre-market, a lot of people are still coming in the market. Some people like to trade pre-market because it's early in the day, but most of the time people are tired and want to just get their money in and out quick. So after hours, normally it's the dumps are worse than after hours. That's why when it runs after hours, it runs harder. Sometimes these stocks would run like really hard, like after hours. But most of the time when they dump even harder. And you find some stocks that go like red for the day just in after hours because the dumping is so much and no one is buying. So it just dump after dump after dump after dump, and then you get like these. So I would say try to stay away from after hours. Like honestly, that's a good advice I will give you and everybody. Like you never see me trade after hours. Like I see a lot of you posting after hours. That hey, look at this, look at that, look at that. That's why I don't even bother. And I never even post. Sometimes I see them. I have scanners running for after hours. I don't even run them anymore because I don't play after hours. So I would say that this is one of the things you can stop doing is trying to trade after hours. So because after hours is not enough volume, and mostly it's dumps. So it's even worse than pre-market because it's mostly is dumps, and I would stay away from that. So I guess now we know two problems that you're trading. That's two trades that you lost on big and after hours, and the second one is you're taking such a big position that you can't afford to
right.
trade
Well, I'm not
emotionally.
gonna do that anymore because I can't with the cash count. So
Well, the thing is that it's not just because you can't. You should say that you're not gonna do it because what if you play good and you get some money and you have the margin account back? So it's not because you're being stopped by them. You need to be stopped by yourself. So the issue is that you need to control your trading. You're now being controlled by them. But what if you have the options that you get the money and you can open a margin account again? You shouldn't be doing that. So you know that this is a problem. You shouldn't be doing it. Like I trade again. I can take a trade like the one you're doing, and I'll be comfortable with the loss. That's fine by me because I'm comfortable taking that loss. But if you're not comfortable with the loss, then do not take that position. And my advice to you is like I said, what I do sometimes when I'm gonna take a big position, I try to figure out how much am I gonna lose before I execute my trade. Because if you don't do that, then you're gonna have a problem. So always think, you know what? And that's what I'm doing in this challenge now because I'm very like I have a very tight loss, very tight one. I'm actually calculating my losses before I even get into the trade because I don't want to get too big like I'm used to, and then I have a big stop loss because I see a specific stop that I'm gonna stop at, and then I'll be like, oh my god, no, if I do this, oh, I'm actually gonna lose like $3,000. Then I can't trade it. So I have to cut my position in more, like I have to cut 60% of the position I want to take now because I want to play this trade. So that can help you too. Just looking at that can help you a lot.
Yeah.
All right, let's go to let's go to a different one. Hopefully not after hour. I want to see like a trade that you did that was good and it didn't go your way, maybe,
Uh,
or it was a bad entry at least in hours, like in the good market hours. Because after hours is just very
yeah.
very hard to play, honestly.
It's good just looking back on these and knowing a little bit more than now versus like 2 months ago. I'm like, why did I do that? That's like,
Well, that's good. Actually, that's actually very good. When you tell yourself that, that's how you're getting better. Because you look back and say, you know what, I'm never gonna do this again. I learned my lesson, and that's how it's gonna be. And then you write it down. You guys, I keep reminding you, like if you keep doing something that's you see you're doing it over and over and over, write it down on a sticky note and put it on your screen, right there, hanging under your screen. Put it on a piece of paper, hang it on the wall, right in front of you, so you're always looking at it. I'm not gonna take big positions unless I know how much I'm gonna lose. I'm not gonna do this. I'm not gonna do that, and it just in your face all day. And by time you're gonna stop doing it.
I'm looking for another one. But yeah, I mean, I have a sticky note. It says, "Be patient, watch for the wicks, pull back, and get out if it's not going well." Because I've like held trades for like, okay, maybe it'll go back up, and then it's like, it doesn't. It's stupid to stay in it.
But hey, I stay in a lot of trades that are red. But as long as you're following your plan, that's fine. I mean, a good, very, very good example would be this one here, GTAI. Okay, I was red on this one big time. I was green, so I started. I don't remember even where I took my entry. Let me see exactly. I have it here in the chat, so we can. Then I have to open the platform. So I think I took my first one at 108, 107. What time was that? 6:41. Okay. So I kind of took my first entries here. Yeah, I took them here because I was expecting the trend. It wasn't still confirmed for me, so I didn't had the trend at the time. So I took it here. Took him here, yeah, like right here. So I was green. I went from here to all the way to here. But then I was like, my profit, I was up. I could have taken, but my profit here was for us to break this and test again because it was a pump for me. So I know with these pumps, they know me either go back to where the pump started, below the pump started, and even crack harder. So I didn't want to take my profit because I'm trying to build this account fast. I didn't take it. And look what happened. This happened. And I kind of held through that too, which was insane. But I did it. For some reason, I did it. I waited. But the thing is that I sold it. And then I bought again. Like I took a loss. And then I rebought it. So I took a loss here at 137. Like almost at the top. So this was a big loss for me here. I was down like almost $700 right there on this trade. But I know it's a pump, and I know I had this line, so I waited, and I know that if it does this, that's why I only sold, like I took a loss on half the position right here, almost. And then what I did is that I added more. So I saw that it's dumping, and then I added more. So I kind of sold half for a loss, and then I added the half that I sold at a better average, and now I get a better average to play. And then we got this again. I didn't sell again because I was like, okay, we broke the trend this time. I am gonna hold, and at least I need to test this and break through it, and it didn't. And then I went again in massively red again, but this time I held through it. So this time I saw all the selling going on. Okay, I still have the same trade plan. I still have the same stop, which was somewhere above this. I know it's somewhere above this, and I wanted to see if it's gonna test or not. And this is what happened. I saw this candle. I wanted to add more, but I was like, you know what? I had enough losses today, and I already started the day with a loss in Mora. And yeah, it did go my way after that, even though it was boring. But we never even went further. We never even tested this line. So it's kind of sad that I took some here, and I just start skating out. This is when I start taking some this whole area here. But yeah, sometimes yeah, it doesn't go your way, but you have to be patient. Like I could have just simply got out here, took my whole loss, and I'll be down for the day, like $700 right there. But because I had an idea of where this would go, and I had a good position size for me. Like I wasn't blowing the account, so even if I had to take the loss, I was comfortable taking the loss in the challenge. I was comfortable taking it because that was initially my trade that this might happen, and I blew it because I didn't take any green here. So it was kind of a bad trade overall, I would say, but I was planning to make a lot of money on it. So my stop should have been here, which is fine, and I entered like a little late, but it does happen. But that's the thing. I was comfortable with my position. If I was so big, I could have been stopped out and the account locked for the day. So I could have lost the whole day, and I didn't even trade anything and didn't make my money back even. So that came back to being in a smaller position than I normally would. I normally I don't like trading these. I normally never trade these because I don't even bother. But because this challenge thing has everything open, so I'm like, yeah, what the hell? Let me just trade this garbage. But you normally would never find me trading these either. So that's another thing. So I kind of broke my rules on this one because I know we don't trade stocks below like $2 to $3. So this was very unique for me to trade something like that. But it's just because they give me the option to do it, I did it. But again, it's all about position size and risk. So even when I did it, I could have taken like 10,000 shares, but I didn't. I took a very small position just in case it pumps against me and I have to get stopped out. I don't get the account locked. So I think position size is very, very important. Like, because right now I'm very restricted. So it's showing you that even me, I can trade with small size. And I can show you too that I'm trading with small size and I can make money. So it's not just about that. So you have to understand that when you take a big position, it doesn't mean you're always going to make more money. It actually gets you more emotional, and it's all about building the account. So taking 200 shares, 300 shares, 400 shares, it's good enough. You make money. The 200-300 every day, 400 every day, it adds up. But when you take a big position, you lose 1,000, and then you're scared the next day to take a trade because you just made a bad trade. Even that the next trade was even a better trade, but because you're scared, you didn't take it. And I'm sure you would sit a lot and look at trades and be like, oh my God, I knew I should have taken the trade and I didn't take it because I wasn't feeling it, because you just took a loss. Now that happens. You kind of lose faith in your trading because you took a big loss, and then you tell yourself, you know what, I'm not going to trade. I'm just going to trade in my head next one, and actually trade it perfectly. Like, it would be like a perfect trade. Be like, you know what, I'm watching this stock, and if this stock does this, or this happens, that I'm gonna jump in here. And then you look at it while it's going and I'd be like, oh my God, I know I should have traded this. But because you're emotionally invested for the day, you kind of ruined it for yourself. So that's something else I would think of. So what else? Let's see another trade.
There's one from January, if you can go back that.
Okay, for what? What? Mara. Okay, then. What day? It's gonna be rough to get. Let's see.
Well, it was a good. January 11th. It's like when it hit the bottom.
Okay, what is that? 29 to 20. Okay.
It's when it hit like it was like 20.8, $20.80.
It's way out there. Way out there. Okay, this is January 11 right here. Yep.
Yeah, so right at the bottom, like it could have been okay, but so I bought some. So it looked like that was like a double bottom from like the third, and then so I bought some because I thought it was double bottoming. So I bought some at like 21.63, and then it went down. So then I sold it at like 20.80 down there, and then I bought it again as it was going back up. And then again, lot size too big, so I'm scared. So I didn't let it play out. So I sold it as it started going down again from 21.40 down to 21, like in there. Where if I had a better entry or waited to test again with a smaller lot size, then I could have followed it at least all the way up to the next, level at like 22.1. So just.
So honestly, because
just
I
look
have
at it and-
I have these lines. So if I was gonna trade this, okay, so this here would have been an entry. I know it didn't work out, but this would have been an entry. I know on the 1 minute it would look different, but this here could have been an entry, and then you try it out, and this actually, because it's a 5 minute, that's almost like if you were here and let's say you waited for the confirmation, that was a 5 minutes, so that was 5 candles of a confirmation. I would have jumped on this one, which is close to 22. That's like a 60 cent, but it didn't go through. It didn't go through that line. So I know that this is not good. And then it would have dumped. So you would have two options here. Either you have stopped out or waited for confirmation that it might go back. And this again was another confirmation here. But the thing is that you're trading in the bad
There's
hours.
no trend. Like if I drew that trend line
Yeah.
from the top, I would have
I,
waited.
and you're trading in the bad times. Like you're taking trades at like 12
Yeah, too
o'clock.
early. Yeah.
12 o'clock is it's like the market is good from here till here, like till 11. 12 is the latest you should be in like if you're in a
Right.
trade
When
already.
I'm at work. That's
Yeah,
the problem.
yeah. So
Distractions are not good.
yeah, but the thing is that you're trading like right now, this whole thing, if you notice, you become now in this range. This is no trade like this here, you're making money. Yeah, this
Yeah.
could have been on the long side or the short side, doesn't matter, but you're making money because retail is pushing it, market makers, everybody is on it. The market is there, the volume is there. But once you get to that 12 o'clock, between 11:30 and 12, you start getting in these ranges on all the stocks, like any stock. That's why I tell you, like, try not to play inside the range. So at least you could have wait for this. But again, this was the end of the day. You had like maybe 30 minutes for the day left, so it's not something that I would trade either. So try to keep your trading. Do not open new trades after 11. That's my recommendation. Unless you see something amazing that's running on news that just came out and the whole market is on it. Because you have to think a lot of people are still trading around this time. So if something comes and everybody jumps on it, yeah, I would play it. But if I'm trying to get in a trade that I saw it through the day, I would start a position at 11:30, 12. I wouldn't do it. I would stay in my trades. So if I was in a trade like I was in GTAI or something else that I was in, yeah, I would hold it through the range because I'm already in it. Especially if I'm green on it, I would just wait for the range to the end of the day and just get most profit I can get by the end of the day. But I would not open a new trade around that time. So it seems that you have a lot of trades that are not synced in right times. So I guess
Yeah.
that's the
Yeah, I feel like I enter and then I give it a little bit for like stop loss, but then it, ends up not hitting it, but still going in the right direction.
yeah. So I guess
Yeah.
yeah, that's something else we can look at. It just the timing of your trades. Also, you have to consider that. So it's like the whole trade plan. It needs to be adjusted. Like you're doing the right things. Okay, like this trade was good. I'll give you that trade because I'm looking here. I kind of see where you tried to enter here on this. There was like a support right here. Like there's one in the back here that I saw right there. I think you're trying to enter at this area here.
Yeah.
The 2120, probably, or 2130, something like that. So this was good. as an entry wise, because yeah, you entered right here, so that was a good entry for a tryout. Like it kind of tested it, and I guess it went up a little bit, so that was a confirmation for you. So that's why you jumped in it. So yeah, that was possible because yeah, if you're looking here, I see that it just popped a little bit. Yeah, so you stopped at it, kind of. Yeah.
Yeah.
Is it this one or this one? I think you were here. Oh, well, yeah, this one. So, yeah. I mean that the trade itself was good. Very like honestly, it's not a bad trade, but I would say it's more of a bad time because you got stopped in
Entry.
this
Well,
range. Yeah.
there's too many shares. So it's like once it starts dipping and you have 1,000 shares or something, I just get out and looking at a lot of these losses. It is for a good thing. Like it is like an in and out. Like it's going down, get out. I'd say that's like probably 75 or 80% of my losses. So I think if I just use smaller share sizes and follow a plan, because when I don't give it enough room for a loss, it doesn't give it a chance.
And I would say something honestly. When I especially you have to understand when you're playing these, which is a massive pullback through the day. Okay, you never know when it's gonna stop. So the way to play these, you have to add on the upside. Do not add on the downside. Because what happens is that sometimes it pulls back, it gets this, and then you might get another one and then another one before it actually turns. So do not add on the downside. Wait for the stock to actually break up the trend. So the trend is all to the downside. And then what you're trying to do is that the trend's trying to break. So when it breaks, yes, it is gonna go. So I would add to the upside and not to the downside. So that's the whole thing. So I would start a small position, very small position. Like let's say that your initial entry in here was like, let's call it 2,000 shares that you want to risk. 2,000 shares was a lot, but let's say you're risking 2,000 shares. So I would start at least with 250 as a starter or 500 and then have 1,500 on the back and wait for the stock to reverse, like something like this. Like this here, if you entered here, this way you should have added, and you're waiting, and you're not just adding, like you're adding, seeing something, adding, and then adding, and now you have a very good entry because you start from the bottom. So even if it flips against you, you're still in the green. So you're not raising your basic cost averaging, and your cost averaging is actually keeping you below where the stock is at. So you're always going to be in the green, even going up. So even if it flips against you at any moment, you can still get out. But at least you're in the green, and you're just adding more to the green. And then if it goes one more time, you're adding more and you're adding more. That's how it goes. But I wouldn't do it on the downside because you never know if the reversal is done. Because you see a lot of stocks, especially the ones I short, they have these fake reversals, and they get more people in, and then it dumps. So always be careful when you're playing like these kind of plays, especially the ones that are like all the way to the downside, because everybody's like, I bet you a lot of people entered everywhere here expecting a pullback. Like this here, people entered expecting a pullback, went against them again, went against them again, went against them. So it's kind of rough to play these ones when they're always dumping. You never know when the dumping is gonna stop. Maybe it won't stop for the day, it just keeps going. Like we've seen a lot of stocks that open green for the day, they'll be out for the day and end up the day in red. Not even like just even flat out like zero. No, they go in the negative. So just be mindful of this because I see this all the time. So the way to play these is to only add on the upside and not on the downside. So that's something also you can think of. Hey, let me see here. I have some questions on Discord. Okay. I was wondering why I don't have questions on YouTube. Usually don't enter on a pullback if the pullback volume is more than half or three-quarters of the previous green indication of a sell-off. Not always the case, but save me a lot of money. Yeah, that's kind of the way to go, Vlad. So our feed after hours is a lot less stable unless some sort of earnings way better in the morning. Just in my opinion, based on what I've seen, sounds like to confirm what I said. Yes, even earnings, man, you cannot. Some earnings you would see them dumping after hours, and next day they would just go. So even that is not. That's why I don't like even playing earnings after hours. I'll take my options for next day, and that's the most I would do. But I don't play earnings after hours. I play pre-market, but not after hours. I've never traded after hours, but I do watch it, and it's crazy trades. I need to just explain why. Thanks, you're welcome. You don't realize, but it's very easy to get emotionally hijacked, so they call it. So your mind just kind of checks out. Until you lose them. Looking back, yeah, you say it's dumb, but it's the moment you're not thinking why plans are critical. And when you start doing what I do, for instance, well, I guess I should just double my stop loss and wait for it to come back. You should probably start right then. That's also true. That's a very true statement too. Again, guys, I think like we all do mistakes, okay? And trading doesn't always go our way. You have to understand. Like, I think I seen a comment that somebody, I was talking about, like, these numbers are gonna change once they start taking losses, and I guess somebody said like, you shouldn't be taking losses, which is like, it's not a right mindset, because your mindset should be like, you know what, I'm gonna take losses. Because if your mindset goes to like, you know what, I don't want to take losses, I want to keep my numbers good, then you're gonna start taking massive losses. Because the idea is that we take losses. It's a part of the game. You can't watch a team that always wins. There is no team that always wins. Okay, they always take losses. Even the best of the best, they will always take losses. But you can't imagine that they're still not a good team. They're still a great team. Because they took a couple of losses doesn't mean they're a bad team. But losses is just a part of the game. So I think I'm looking at that. Yeah, Reckless said no need to start taking in more losses. But this is just a part of the game. I mean, you cannot change that. It will never change. You always take losses, but you're trying to get the least amount of losses. That's all that matters. Anything else is basically useless. So, but you have to have it in your head, guys. Like, you have to be ready for it. So when that loss comes, you take it. Okay. So when that loss came for GTAI, and I wasn't comfortable taking the loss, making it too big, I took half out the table. Even that I was thinking that it might have gone my way or everything like that, it's fine. I decided to take that loss in, just to be not emotionally invested, and just in case it doesn't go my way, at least the loss won't be even bigger. I took half of it out, and I could have taken I could have ran, and I could have taken a bigger loss, but that bigger loss would only been on half the size instead of the full size. So always have this in mind too. Do you ever trade halted stock? I mean, you can't trade halted stocks. If it's halted and you're not in it, then you can't trade it. So yeah, but of course I got in a lot of stocks that I was once halted in. That's fine. Yeah, can't do anything about that. After no. It depends. Honestly, it really depends. If the volume continues and I see that it's gonna go again, yes, I will jump in it. Like, because this happened a lot. Like, I mean, there's stocks that keep going. I mean, you have BMR, BMRA, CRBP, all these, like, and of course a lot of Hollow, all these, they halted so many times and they kept going. So yes, you can play them after the halt, but it all depends on the volume and the trend and what the stock is doing. It's not like a one size fits all. Some stocks that go up so fast, no volume, and they halt and then they sell off. Of course, I'm not even gonna be interested in even looking at them. So it depends when it's happening and where it's happening. So okay, we have Nature. Hey, what's up? Hi, Hennessy. When shorting a stock, I'm concerned if the stock halts for more than 24 hours. What if the stock goes to the moon overnight? I mean, it could happen. But again, I mean, you're trading the same hours they're trading. I mean, the stock is not gonna go overnight when you're not being able to trade. So I mean, it's not like the longs have more hours than the shorts. So it's it could happen. But I mean, this is something that happened once in a blue moon. I mean, I'm not gonna put my whole strategy on something that might happen. I mean, the things that you see, the stock jumps from, like that Chinese thing, I think that's what you're talking about, the jump from like $30 to $500. Yeah, this is a very rare occasion. I mean, you'd be stupid to be shorting something like that anyway. I mean, there's no why would I hold a short on a stock like this overnight in the first place? But 99% of the time it does not happen. So you're putting a strategy based on something that's, being hit by lightning strike kind of thing. So it's not a strategy to actually be thinking of or even worried about. If it happens, it happens. But I mean, it is what it is. Again, nature, that's up to you. If you see that the stock is holding, you can short it. I mean, hedge funds short stocks for months, for years. So they hold shorts for a long time. It just depends on the stock and if you're holding a pump and dump. I used to hold pump and dumps for days, because the thing is that after the dump, the stock just continues to go down for days. So you can make even more money, but that depends on how much fees you're gonna pay. It's a lot of calculations you have to keep in mind, because you're paying these short fees every day. And if you hit the weekend, you're also paying the weekend while you're not trading, and it doesn't count as anything. So let's say you hold a short on Friday, you know that you're gonna pay the fees on Saturday, Sunday, even that you're not trading, you're paying the fees anyway. And sometimes the fees are enormous. Like TradeZero used to charge enormous fees, like 5x overnight. So this means that, let's say your fee was $40, or let's say it's $100 for the day. To hold it over the weekend, the first day alone is $500. So you have to make the calculation: is it worth it? Am I gonna make $1,000 out of the $500 I'm gonna spend to hold that short overnight through the weekend, or even hold it overnight in the first place? So it's a lot of calculations that you have to think of when you're shorting. It's not just a simple answer I can give you. So yeah. NSC, what is your take on trading a 1 minute versus 5 minute time frame? I sometimes exit prematurely using 1 minute time frame, but 5 minute was solid. I would have made money by staying longer even if there is temporary dip. I normally like to have 1 minute and 5 minute. I'm looking at the same stock. Like what you guys see on my second screen, this is actually a screen. Like I have a whole screen that's like that. That's watching a stock I'm trading. So I'm normally watching at least 2 to 3 charts on a stock I'm playing. You can't just trade on one stock, one chart. So yeah, that I wouldn't recommend just trading on the 1 minute unless you're very poor on resources, that you only have one screen. And if that's the case, then you shouldn't be in more than one trade. And even if you have one screen, you can have 3 charts on one screen. It doesn't matter if it's a laptop even. So I would say at least have 2 for any stock you trade, the 1 minute and the 5 minute, and keep switching the 5 minute to 15, maybe 10, 15, depending on what platforms you use, but do 10, 15, 30 minutes, because some charts, they look way better on the 5 minutes when you look at them, and it gives you a better idea. So even this one on the 5 minutes, it looked way better on the long side. Even when I looked at it here, I was like, oh my god, it looks like way better. But then when it dumped here on the downside, I was like, okay, that looks better on the short side. But then this came on the 5 minutes, and I was watching all these wicks. I mean, you don't see this one here, So the 5 minute kind of show, look at the 1 minute. You don't see that on the 1 minute. So on the 1 minute, yeah, you have some long wicks and everything here and here. But if you see here, the reason I stayed is the 5 minutes showed me that, which I did not see on the 1 minute. So you have to think of that. 1 minute is, but it gives you the correct entry. But honestly, watching the 1 minute itself, it kind of drives you nuts. So you have to watch on a longer. Look at that. Look at this stock now. It was dead. I mean, you can tell here I was in this range. Yeah, on the 1 minute, it shows you some excitement, pumps here and pumps there. Like these moves and then these, and you feel like you're gonna get out. But if you're watching on the 5 minutes, it's like the stock is not actually moving whatsoever. So yeah, the 5 minute helps a lot. Again, this candle you wouldn't have seen if you're on the 1 minute. It did not even appear on the 1 minute. But the 5 minute kind of give you a clear where is it going. So yes, I'd recommend watching 1 minute and 5 minute at the same time. Let's go back to Heather, or if somebody wants to jump in. I don't know if Heather still have stocks for us. I'm good to go. Let's go. I'm just answering some questions. Unless somebody else wants to jump in. If you guys want to jump in, go ahead. It's okay. Share your bad trades. We all have bad trades. Even me. That's fine. As you guys see, I'm showing you my bad trades too. So nothing wrong with that. It's actually good learning lesson for everybody. So yeah, if you want to jump in, talk, let's see what you have.
Trying to find a good one, but even my good ones, I made money, but they didn't seem very smart.
Hey, I'm happy that you know that. Actually, you know how much it takes for you to actually say that? Because you think it's not just bad luck. You actually know that you did something wrong, which is amazing. That's
It's
amazing.
like most of them, just like clicking on a bunch.
Yeah, I mean that's amazing in its own. Wanna hear about Heather's verb trade yesterday? Yeah, she's all
Yeah,
here.
Verb. I love Verb.
You guys heard that? That's the lady was screaming all day. Verb, verb, verb.
Yeah, I got in at 0.20 cents.
Yeah, she killed it. Killed it, guys.
Yeah. And I probably should have sold it like on the first, I think I bought 2,000 shares to start. And then I probably should have sold a bit when it spiked, is what I should have done. But then I held it.
So my God, you're trading a $6 stock. You bought 5,000 shares, and you're trading a 30-cent stock. You bought 2,000 shares.
2,000 shares at 20 cents.
So that's crazy. Do you see, do you see anything wrong there? You see anything wrong there? That's
And then I think I sold it when it went back up after the first dip to the resistance or the previous high. And then I think I ended up buying another like 500 shares or something. And then I waited, like you said, boredly all day and just watched it make higher highs. And then once it went into the halt,
yeah. That was it. That was
yeah,
it.
I sold 75% of it.
Nice.
Then I had to go to golf lesson, so I was like, damn it. But then I said, like we were talking about, then I just, I think I just feel like a trailing stop loss on the rest of it.
You know what? What is good, guys, that you guys never think of is that let's say you entered, you were so lucky you got in here, okay, and then you sold here some, okay, and then you sold again some here, okay, and the stock let's say dropped to here, okay, and you were watching it, you didn't enter yet, and the stock has just been doing these moves, okay, and it's holding. You can enter again, it's okay, even that you sold. That's the beauty of just like setting some and slowly scaling out, and then after that you did the scale out, what happens is that the stock drops again, but let's say it drops and holds, okay, you can buy add on whatever you have left. So let's say you sold like 80% and you have 20% left. If you buy here even higher than, let's say you sold it at 30 something and then you bought it at 40 something, that's fine. It doesn't mean it's a bad trade, but then your stop should be very tricky here, because your stop would be where you've been watching. So it's okay to add on trades that you guys sold. I do this all the time, like especially in the stocks that keep running all day. You can buy and sell at just your average will keep changing because you're not closing the whole position, and that's the way you're not closing. You're scaling it out slowly. And at the same time, if it goes again to a pullback and you see that it's continuing based on a trend or something that you see, you can rebuy it again, and your average is just gonna go up, but it's not gonna go up by much because you already bought in the cheap. And let's say the stock is already up like 100% from where you bought it at. So that's also a good strategy you can use. But you did great on this trade. I love the way you traded it. Was a perfect trade.
Like, I really enjoyed just like, because I feel like I've been like clicking and getting it, like just over trading, like, but like this, like once it went up and I saw profit, then it's just like so much more relaxing and enjoyable to like watch it and draw the trend lines and make sure it's not breaking previous support and all that. It was really awesome.
Yeah, I'm good because like I mean it's crazy that you were going in rum with $20,000 and he's going in here with $400. What like huge difference. So,
Crazy.
so I guess you're just too emotional. So you just controlling your position size is just gonna solve. I would say 90% of your problems are very easy to fix. You're trading in the wrong hours, which is easy to fix. Just trade in the right hours, and just adjust your position size. Other than that, you're taking great trades. I mean, even the Mara one that didn't go against you. Like I know went against you. It was a good trade, good plan. But again, because it was on a very high downtrend stock, it didn't go your way, but it could have went. But the idea itself was good. I'll give you that. The idea was good. You waited for the right moment. It wasn't a good support, so it just didn't play your way because it was just on a too much downtrend, and also the time. Again, the time wasn't good time to trade it, so that added to it a little bit. But overall, it was a good trade. It wasn't in the right time, and because it's a very down on a very high downtrend for the day, and especially I don't know what Bitcoin was doing that day. Probably Bitcoin was crashing that day, so it was a lot of stuff happening. Okay, guys, come on. Anybody else wants to jump in, or if Heather wants to share something else? But I think Heather is already getting the point of what she needs to do to get better at it. So
I highly recommend look because honestly, this is the first time I'm using that trader sync.
okay.
But it really is awesome because it just you click on it, you can see your trades, and it really is good to look at.
Oh no, it's amazing. It's gonna give you a lot of information that you don't know.
Yeah. And it tells me it's like, oh, your biggest wins are between 15 and 40 minutes. So I'm like, oh, well, that's maybe I should stop scalping.
And it's gonna give you like the range that you're playing, like also what stocks are the best. Like, is it mid caps, large caps, small caps? It should give you the time of the days that you're making the most money. So it's gonna give you a lot of details that you don't know. But actually, when you look at it, it's gonna start giving you a trade plan in your head. You'll be like, okay, I need to start doing this more, this more. So that's what I like about these things. Come on, guys. Your questions. Give us some questions.
I don't know, for me, I find like it's hard in the like early because I like to trade like with Webull at like 4 in the morning during the week, and then Fridays I'm off so I can trade during the day. But like these stocks, like because I like to have like massive volume, there's just no trend, so it's like very difficult to.
Yeah, I know. It's not easy.
Yeah. So where do you get like you have like your watch list, but how are you finding more stocks that are more have volume?
You heard the lady.
Aren't as volatile.
I think you guys seen how I do it. I keep watching for that lady to keep screaming stocks at me. That's all I do all day. That's how I do it. I mean, that's why I don't do watch lists, because she's my watch list. And as you see, I have a lot of that I'm looking at, and basically I don't even bother. That's the beauty of this one, is that just I can get a lot of info right away. So if I see a stock that's useful to even look at based on the volume, like it's telling me, because when I'm looking at these, the way I have them set up, my eyes know the colors so good that I look at a stock and I know if there's volume or not, so I don't even bother looking at it. But if I see something interesting, or I see a stock running and has good volume and everything, then I'll put on the chart and start looking at it. So she eliminates a lot of the time that I need to do, and that's why I don't do watch lists anymore, because the scanners are basically doing the watch list for me through the day. That's what I do. And as you see, like, yeah.
Like overnight stuff, like long.
Oh yeah, all the time. I used to do a lot. I used to do overnight all the time. I don't have the capacity mentally for it now. That's before I started investing, honestly. So that was before I started like getting into actually investing. Now I don't do these. Every once in a while, I'll get an idea again from somebody that I know, or like my swing group that I know, but mostly we trade like bigger stocks. Like I have an idea here, and I would look at it, and if I like it, I'll trade it. That's the only ones I overnight, but I don't overnight like stuff like SOUN or stuff. Yes, they pay. Yes, some of them are good. The idea is that if you see a stock that to hold overnight, my criteria for holding overnight, especially stocks that were running, was that if I see a stock that was running through the day and it held, even that it did a pullback, but it held all the way to close, okay, I would risk taking it overnight. But also I would make sure that they don't have any offerings opened, because sometimes they drop the offering. I know normally it's not the same day, but it did happen sometimes on the same day, on the day after, at overnight, when the markets are closed, after hours. So you never know when it's going to drop, but you always have that thought. So even if you think you want to hold it, at least know that you need to hold a smaller position just in case they drop the offering. You don't lose so much. But yeah, I mean, if the stock is holding, there is volume in it through the day, big volume. You know, you seen the chart and you seen that this stock normally moves on the second day, also moves a little bit. Then yes, you can take a risk and hold it. Yes, you can, but I just don't do it anymore. For me, it's just a headache. I don't want to wake up at like keep watching, because then you're stuck to be watching the stock all the way through after hours until it closes, and then you're stuck to open at 3 in the morning when the stock opens, because you might get that early pump at 3 in the morning and then the stock dumps. So you put yourself under so much stress trading these than taking just a good swing, because there's a lot of good swings out there. My scanner throws a lot of like swings at me. I don't even bother looking at them anymore. But sometimes I see good ones. Like they're very stable ones, less headache like that, so you can hold them. But I just don't have the capacity for it, especially that I have a lot of work that I'm going through right now. Beside everything I do here, I still have stuff that I'm running, like business and stuff. So I'm so overwhelmed. So it's not for me. But if I have the capacity for it, yeah, swings are good. I used to know people that swing only. They don't even day trade. They just swing all the trades. So you need to run some scale. I would say like go to Finviz. Look on YouTube. There is a lot of good guys that have like good swing like scanners that you can do for free, like Finviz, or even on TD, like here on Thinkorswim. You can do some good scans and it's gonna show you like a lot of good trades. I can give you an option here that I have. One of the scans, it basically runs candles, and it tells you like this stock has been running like for how many green days it's been running. So you can think of maybe taking a short position, or it shows you like how many red days this stock has been running. Like it's been running like that's the 12 red day in a row, or that's like the 15 green day in a row. You know, and you can look at the stock, see what's running on the upside, downside, and you can maybe like play it. But mostly these are mid to large caps, so it's more stable plays. You're not gonna make crazy money, like, but you're still gonna make money. You know, every dollar counts. If you make 5%, 3%, that's free money for me. Hey, let's go through some questions. On a pullback and watching the red candle with the long bottom wick, I have been struggling to find the entry point for the next green, going green. Well, the thing is that the way I always say it is that if you see this candle, you need to wait for a confirmation. So your confirmation is going to be either the next candle or the candle after it. So you need to wait from that pullback with the wick, then wait for the next candle, at least 1 to 2 candles after it, to get an entry. So that's the way you need to have the confirmation, because that wick by itself is not a confirmation. It's just telling you that yes, it had some buyers here, but you have to remember that these buyers could be people that are covering. So these are shorts that are covering and not actually buyers. Like let's say I was short and we all start covering at this specific area. Yeah, we're gonna buy now the stock, all of us, but we could be just covering half our positions, and it shows as a buy. But if the next 2 candles do not show the confirmation that the stock is reversing, so it is not reversing. So this candle was just some short sellers just covering. So you have to think of that too. So can you swing large caps like NVDA and SMC? Explain the strategy of the swing trading. Yes, of course you can. You just need to be following like if you're gonna trade these stocks, especially these ones, follow the markets, follow the news, and follow the trend. So you need to be on a trend, following the markets too, and that makes sense how you play it. But yeah, you can play it AMD, Tesla, Rivian. All these are, I know Rivian is not large cap, but let's say like Tesla. If you're gonna trade Tesla, I could trade Rivian, because Rivian follows Tesla kind of very close. But yeah, you can trade these just based on the news, if they have news. And I mean, just follow the technicals. The technicals on these are always best. They normally do follow technicals on the most, like, I mean, the stocks right now you guys are coming in a very bad time in the markets to ask about this. But normally when the markets are stable, these stocks do follow closely their trend lines, like all the time. It's just hard to do it now because of how the stocks are. Like, if you see, guys, I have stopped trading AMD since here. The stock is now here, just to show you that like The market is very volatile right now. It's not the right time to be doing that. But when the market is stable, it is easy to trade these. Like super easy. Just follow the trend line, know where your stop is at. You're not gonna get massive moves. And always you have to be on top of these on news too. So you know that Nvidia is not gonna be doing something in the next couple of days, or they have a conference somewhere, or they have something to announce. So you need to be on top of these companies, knowing what they're doing. Like again, I know some people that are always trading Nvidia all the time. Like I think if I look here at my buddies, let me check my the message group we're in. But I think he just bought Nvidia, to be honest. Like on Friday. Let me see. What did he buy? Yes, he did buy Nvidia, Mara, Wolf, Ravian. He bought all of them on Friday for swings. So, but he follows Nvidia like he follows Nvidia. Like he knows everything about this company, and he plays it for swing trades all the time, either on stocks or options. But he's always all over it. But he's very familiar with the stocks. So again, these stocks, like you're gonna find people that play Tesla all the time. It just because they're very familiar with the stock, they know how it moves, and that's it. They know it moves this much every day or does this every day. So it becomes like a routine for them. They know when this stock drops this much that this is gonna happen, or is this gonna happen, or they're waiting for news, or they know Elon Musk is gonna do this in a couple of days or this or that. So yeah, you can play them, but just you need to put some effort into them. That's about it. Do you have an LLC or anything set up to avoid massive can? No, man, you can't run away from it unless you put your money in the Bahamas. So yeah, LLC won't save you much. But again, the only thing you can use is if you're day trading would be Market Elect that I shared with you guys before, and that's gonna be your best option to getting through around some and just trying to pay for all your expense. So if you're in this room, man, the expense you're paying for this chat, you can take it out as expense for trading. Anything you use, man. Your internet, part of your house that you're trading in can be an office. Everything you spend, man. Like let's say I'm using trade ideas, or I'm paying this much fees for the trade zero, or fees for here, all this is the stuff you can take out. But unfortunately, capital gains, you cannot get around it that much. Do you believe they have set up the computer trading to evaluate the best way? What? Hold on. They believe they have set up the computer trading to evaluate the best way. Seems some of the moves I've seen lately are even more volatile than normal if you're timing it. Yeah, man, yeah, you're trading against the machines. I mean, there is no way around that as long as you know this. That's why, again, I keep telling you guys, all we're trying to do is just get a little bit of crumbs out of wherever they leave us on the table. So that's all you can do, because they have all the cards. We're playing against the house, and you're just trying to get whatever you can and run out of these doors before they take it back. So don't extend your stay if you take the money, and that's why you always take money and run. Don't try to make that much or think you're gonna make that much, because the house always wins. It's as simple as that, man. And it's gonna keep getting harder and harder the more the machines are like right now there's more retail, but yes, the machines are getting a lot more. It's not what it used to be, and it's getting harder. By the time, I'm telling you, it's been harder and harder and harder, and it's just gonna continue doing that. Especially with AI now, and everybody doing everything with AI, and people are even building scans with AI, building indicators with AI. So AI just trading is just gonna keep getting harder. That's the way it is. As long as you build a strategy, you can always try. You're trying to ride the wave with them. That's all we can do. We cannot move a stock. We wait for them to move a stock, and if we're lucky, we ride the wave with them. Then we make money. That's it. Easier said than done, but takes time. But it can be done.
I have another one if you wanna.
Yeah, let's go. Since nobody.
So this one was good, and then I tried to add more, and then it turned out bad. So it was March 11th, PIK
Oh, I remember this one.
at 5:03 in the morning.
Yeah, this was a good one. 5
So
5 what?
5:03, the first big
Oh,
candle.
nice. Oh, that's a perfect
Yeah,
trade.
nice until it wasn't nice.
How
So
was it?
then I bought there. What was it? Let's see. Bought shares. Oh, I only bought 21 shares to start. Because,
Okay.
maybe it was the pop. And then I waited for pullback at 528. So I waited for pullback because it was looking good, I thought at the time. And then I thought it was going up because there's 3 green candles. And then I bought it right in there, and then it ended up not going, and then I sold it.
But the stock over here, if you notice, it didn't really have yeah, we started very early on this one, okay, and you had this if you put a trend, there was a trend right here. So this was a trend, is where he entered, which was good, but then the trend broke. I mean, it was untouchable again because it just did that. But over here, you didn't really had pullbacks in here. It was just pulling back because
No, the next one, once it dipped back down to
here.
yeah, and then I bought that third.
So why you didn't buy more here? That's my question. So when you saw this here,
Maybe I don't know. I was maybe scared it was gonna dump. I don't know.
yeah. So this is what I was told. So if you were entering here, I would have sold some
Yeah.
here and here, and then kept getting more and more through the day. I mean, over this one, you see, it couldn't get out. I think I was short on this one. I think I shorted this one. Yeah, I did. It was a good. Yeah, this was a good short. I shorted this one. Yeah, but if you see here, it just, and that's why I'm saying sometimes the downtrends do not break out. Like, a downtrend kept going, and then it dumped when the market opened. Like you had this, and then another downtrend.
Right. So did I just get well, I should have bought more, but I waited on that pullback. So you got 3 green candles, then it was a red. So I'm like, okay, there's to see what happens.
Yeah.
And then I think I bought on that next green one.
This
And
one.
then it
Yeah.
ended up not going. So I don't know if that was a bad trade or it just didn't work out. But I got out immediately.
Well, that's good. I mean, this was a good, this is a confirmation, but the thing is that if you notice these candles, okay, let's look we didn't have the trend line, okay? The trend line did not happen yet, okay? So we don't know anything. But what we know is that we had this here, and we have these candles here. So what happened is that, first of all, this was such an algo one. You can tell right away, there's no wicks at all. So this was very generated computer-wise. Okay, this one is almost the same. But the whole idea, let's say you didn't even know this stuff, you didn't notice that. These 3 candles over here did not break anything. So you did not break the structure or did not break this. So even, yes, you had the 3 candles here, but all you broke was this candle. So you basically 1, 2, 3, and on these you broke to here. So you 3, 1, 2, 3 here, and then 1, 2, 3 only broke these, and he didn't even try to break the big one right here, and didn't try to break the resistance. Yeah, the idea itself was good, but he just didn't have enough effort in it, especially with the volume. So if you look at the volume here, the volume over here, yeah, it was good, but you didn't have the volume to push it. So you have to think that volume was still going down all the way. Like, look, the volume just died. There's no volume. It's not going up, it's actually going down. So that's the whole thing. So it just, but the idea was good, especially that you crossed the 13 here, which was good. But I would have waited at least for this candle to break this one, at least.
Okay.
The big one here, and or break this at least. I would wait for at least the resistance to break. So that would be a confirmation. Yeah, I know I will get in late a little bit, better than entering here. But especially with stocks that move that much, I mean, the stock went from here to here.
Yeah. I mean, just
So
that one candle, like like it's like $2 in that range or
yeah,
something.
I mean,
So
this range by itself is like what? This range alone is like $4. So yeah, you could have made money here, but if you wanted to play it for the upside, I would have wait for at least a resistance break just to confirm, especially that this one had a lot of trouble. Like if you see this one, you know that there's a lot of trouble in this area because first of all, you have this big candle. So this indicates there is liquidity zone here. So we know that for a fact. There is a zone here. So if you wanted to play it just for the to get a quick buck out of it, then yes, I would have entered on this candle and then sold on this one if it didn't go through, and I would make just quick money and out. But if you're playing it for the upside, then you should have waited for the test of the liquidity zone itself, because the zone is here based on this candle and based on these candles here. There is a zone right there. That's why you had a fight in here between all these wicks.
so that's the support just based on the wicks of that red candle.
Yeah, basically, yeah. But the idea was good. I mean, he played it good. It was this is I consider a good play and a pullback because he had this here showing buyers or whatever short sellers covering or buyers, but this was a good candle indicating a reversal, and then he had 1, 2 confirmation right there. You could have jumped on the third one and it just didn't go your way. So it's fine. But the idea was good. This was a good trade. It just didn't go your way. So I can't really say it was a bad trade. It just didn't go your way, which is fine. It happens. So that's okay. It happens to all of us. We can't always be perfect about these, but especially this is normal with these trades. A stock that went from $2 or whatever it was like to $19. Yeah, stuff like that would normally happen. But he had a perfect entry here. This is even a better entry, to be honest, because this one, like you see, like he had the pullback. I mean, before the mania here is just. So if you look, he had a nice run, pullback, slowly going up, and it's like kind of holding a trend. So even if you weren't in this trade yet, you will put a trend right here, and it's kind of holding a trend. So you can say the trend is here, trend is here, okay, and it's holding kind of a trend right there. So it went down under trend a little bit, but you can move the trend down. So it depends how you want to see it. For me, I think this is a better trend. But let's say I didn't like this one, and I like more like, so you would do it like this. And I just the thing was that it doesn't have so much data. For me, I prefer to have more data points, so that's why I like it. So you can have it here instead of even like you can do it something. Sometimes I used to do like that too, like like array, and just know that these two would work and just call it array. So and then you're good. You're touching a trend, and then over here, and then you had this one here, which is indicating buyers jumped in again, and then this one, and this was a rocket ship. So if you would able to see this one when it's happening and you jumped in right away, that was a very, very good trade. Very good, because you see the volume building up here, and then you kind of get up, like you see that these two were less volume, okay, and then you get big boost volume for indicating buyers coming in, and then another green one here with volume again, and then boom. And even if you didn't enter on this one, I would enter on these two right there, because this was another indicating again. So even if you miss this one, you have this one, and you have a wick here, and then you have a wick here indicating buyers, and there's still volume. It's not just buyers, but big volume compared to before. Look at the volume here. It's big volume. So that's a big volume here. Yeah, this dropped a little bit, but then he had more volume. So you could have waited here or even entered here. But then your stop would always be that line, like your support. That's your stop. So the idea here was a good one. This was a very, very good trade. Overall, both of them were good trades. But you got lucky in one, didn't get lucky in the second one, so it's fine. And you got out good. So that's the whole idea, that you seen it not happening, and you're like, you know what, I'm just gonna get out, and you got out right away. So that's amazing. That's what counts, actually. You didn't hold it through. You weren't this guy that got in, or this girl that got in and now sold it here, So bravo. That's all I can say. Because you could have taken a $10 loss, but you took a loss right away, and that counts. So you're doing amazing stuff. That's what counts. Great analysis on the engine. You're welcome. Thank you, Compose. So well done. I can tell you that like, you're doing very good.
Thank you. What volume bars are you using? Are those Ricky's like inverted or?
There's something like Ricky's, something I've been
Yeah.
using way before I met Ricky, and I'm more used to them than Ricky's, so that's why I just continue using them. For me, if it's working and it ain't broken, I ain't fixing it. So,
Okay.
and I'm so used to my technicals. That's why if you see guys like I don't use a lot of technical. I'm so used to my own technicals, and they've been paying me, so I don't want to change them. They could be better. No, but honestly, when I put Ricky's like at some point I had Ricky's here right next to this one. They're almost the same. There is a very slight difference between them. I think it's just the way they were written, maybe because this was way before I met Ricky. So like years ago, I'm talking like many years ago. So it's probably very close to him. They're very slightly different, very slightly different. But I think it's exactly the same as Ricky's. So if you have Ricky's, I think it's the same exact thing. So it still does. I see a lot of people are getting the blessing scanner and liking it. I like it. I think from all the scanners that are from all the indicators that Ricky has, I think this is a very good one. It cuts through a lot of the other indicators do. It's kind of less lagging too. That's what I like about it, and it's very accurate. So far, it's been very accurate. But my brain thinks like it, so for me, I use it as just a second opinion. But my first opinion will always be my head. But it is a great one. Like, yeah, that's why if you see, man, my charts are normally just no indicators whatsoever. I try to. My head is my indicators. So it just varies. Some people like indicators, some don't. But overall, if you use indicators, that's a great one. If you don't, then that's a different story. I'm just giving my opinion. That's all. Yeah, I keep it simple, man. I always did keep it simple. I noticed that you have a light blue and pink candles. No, this is something I took from Bob. Uh, it's not RJ's. I only started using it not even 2 3 weeks ago. I haven't used it for a while. I just leave it on the chart. It's fine. It doesn't. It's just more of a confirmation thing for me. If you notice, my other three charts do not like these do not have them, so I just have it here. Yeah, it's funny because I come from a different school than RJ's. Like when I used to teach, like when I used to give classes to my students, I always told them like keep it simple. I called it KISS, keep it simple, stupid. I think that's the best way to go with trading. The simpler it is, the easier it is, because you're trying to make simple adjustments, simple trade plans. You're not trying to make it rocket science, and the easier you make it, the better decision making you're gonna take. Because I used to see people that have more indicators than they can see the candles, and I'm like, what is going on? You have like 30 indicators. Yeah, the charts look fancy, all these colors, squares, volume profiles everywhere. Using the Ichis, using that Bollinger Band, blah blah blah, and I'm like, how did you even see the chart? Like, what the hell? Yeah, the chart looks amazing. Yeah, if somebody like a noob that comes in, like just started trading and looks at you, thinks you're a professional because you're looking at it, but you just can't trade it like that. It just doesn't make any sense. I mean, even me, like I don't like this ones. Like I have a lot here. I normally never even look at, like they're there because they've been there. My eyes so used to them, but this is insane. Like I see people that have like indicators all the way to here, indicators everywhere on the chart. It just I seen so many bad examples, and I'm not talking. If you're talking about this one, to the point, yes, but if you see, it's not accuracy. Like right here, it's showing that indicating something, and it actually went the other way. Like this is indicating that it's gonna drop down, and look what it went. It went to the upside. Again, this one indicating that it's gonna drop. It went to the upside. So again, and it's not always as easy as you think. So it's only sometimes we prefer to look at indicators or things that are making sense at the time, but most of the time they're not gonna work as you think they work. It all comes to you what your brain sees. So I can see something that you see completely different. So what else, guys? Anybody wants to jump in with me and Heather? Have any trades we can look at? I feel like we did the whole thing just for, like, Heather is the only one that have the guts to come out and speak. You guys don't. You guys are all green. Nobody had bad trades. I guess it's only me and you, Heather, that take bad trades. Come on, guys. You need to talk about it. It's fine if you talk about it. Oh yeah, of course, man. If you don't talk about it, like, how are you gonna learn from it? That's the whole thing. I mean, if you're holding it to the chest so bad that you think you did such a bad mistake, like that, we're gonna laugh at it. No, we're not. It's actually good to talk about it so you don't do it again. Not because we're trying to make fun of you or anything like that. We all do mistakes, man. I'm doing mistakes myself. I'm showing you guys the mistakes I do. I mean, and I consider myself a good trader. I am. I'm not like a pro or the best out there, but I consider myself a good trader, a decent trader. But mistakes are always gonna happen. I mean, again, like, I mean, Heather had a good case here with PIK. She had a good entry. It just, I mean, yeah, analyzing now it's easier to say now when I'm seeing it after it happened. But on the fly, when it was happening, it's actually a great trade. I can't indicate that it was a bad trade. Yeah, maybe she should have waited, but you never know. When this stuff is happening, you decide to make a decision here, like, I'm not going to wait, or it looks like it's going to go for it, and you just take the trade at the point. But the idea itself, overall, was a perfect trade. It just didn't go her way. So it wasn't like a bad trade. I bought an 860 put with 15 for what stock? It looks like Nvidia, probably. Nope. Nvidia 860. Yeah, I mean, this is more of a gambling, man. That's yeah. That's I don't trade the stuff like that for that reason. 860, but. I mean, honestly, Nvidia looks like it's gonna pull back. Honestly, it looks like it wants to pull back. So far, like, it's so many pullbacks, pullback, and the pullbacks are big. Yeah, 860 is good, man. Because honestly, if Nvidia breaks 860, it looks like it's gonna test like 850 or lower. Especially if it breaks 850, it's gonna be like all hell breaks loose for this one. It can go all the way to here. Yeah, I'm expecting the markets are gonna start taking us down a little bit. 15 March. So yeah, you expired already, unfortunately. Could have tried to roll them over, maybe, but yeah, it's hard with this stuff. Yeah. Yeah, and hey, if it works with the way you do it, then do it. But I mean, it's not just 100. It's not just gambling. The thing is that when you play with options, especially like short-term options, it's more of a gamble. If it goes your way, you can be on the right trade, but it just takes more time. So that's why I prefer stocks than trading on options. I only trade options if it's stuff that I'm sure a lot that it might go my way, like earnings of stocks that I'm holding. Mostly are the only options I normally used to play. But I might start playing some options, especially on the market itself. Like I'm thinking about starting taking some puts against the SPX or SPY, just because I think we might start taking a little dive. Like it's time to, for the gravy train to stop a little bit. So I'm still debating. I'm talking it out with some of my friends, and we're looking at what trades we're gonna take. But it's gonna be more of a longer time frame. But I think we might take a dive soon here. You're welcome, my Eagle Flies. Yeah, just markets overall, man. I mean, honestly, these markets are very, very tough right now. It's not even, just forget that we had 2 bad days in a row. This is, you guys gonna start seeing this all summer, so get used to it. So this is summertime trading for you guys. What you see in the last 2 days is basically summertime trading, so it's just coming out a little bit early than usual. So be ready for it. But honestly, the markets themselves, the market overall is not a good market. I know it's going up, 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 but this is not a good thing for the markets, because markets need pullbacks up. Yeah, it's doing these little pullbacks, but overall the market just been on fire, and it's gonna take us like a big slap when it happens. It's gonna be, yep, Monday will be fun for sure. I want to see what's gonna happen with interest rates soon, man, because with the numbers coming out, it seems that market's freaking out. So if we don't get what the market actually wants, which is interest rate to drop, I think we're gonna go on a nice slide to the downside. It's gonna be an extreme slide. It's not so going up. If you guys ever notice, going up is so easy. It just goes up, 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 up. About when the market is at this high of, they're like, we have a lot of fear in the market right now, and when this happens and you get anything that triggers the market, you guys gonna see the slides are 10x the way it was going up. So even that everybody think the market is going up a lot, the downside is gonna be super fast, super hard. Like when it drops, it drops like it tanks. It doesn't just go slowly like this. Like these are like counted in. These are like nice pullbacks. But when the market is in that fear that what happened, like you guys seen, like what happened yesterday, we had these ones. When the market actually hears bad news or something is gonna happen, we're gonna take like nice dives. It's gonna be fast. It's gonna be bad. But a lot of people can make a lot of money on this. So if you're waiting for this and the right time, you can make a lot of money on this. So some people are gonna make good money on it. I'm betting a lot of people are betting against the markets. We just don't hear of it. But the big boys are all betting against the market for sure. So either way, they're hedging, so it doesn't matter. So for them, but I think they're hedging a lot more than they normally do, just because the markets are way up there. So, oh yeah, easy, man. We don't make anything, man. I'm telling you, we're the little cockroaches ants in that trading game. We're nothing. We're just, I'm telling you, we're just getting whatever is left, and these little crumbs that left on the street. We're trying to just pick it up, So don't ever think you gotta do what they do or trade like them. They have unlimited amount of resources that we don't have and we'll never have. Okay, guys, I think I'll call it here. I answer all your questions. Let's check anybody I missed here. No. Did I miss anybody on YouTube? Just so I can not feel bad about it. Let's see. Okay, Nature's saying, if there is a trend going on, do you think it's a good idea to stay a little longer? Yes, of course. I mean, we're all trading. You're trading the trend. So if you see a trend or you're treating a technical basically, and if you see it going or something is happening, then yes, of course, I would do it because we're following the trend. If you notice, like a couple of them, I told Heather that I need to be following the trend. So if the trend is there and you're trading a stock, yes, you need to. Once the trend breaks, get out. But as long as the trend is holding, then you can definitely hold it. Yes, that's a true statement. Bulls take the stairs, bears out of the window. So, Monster, thank you, sir. Appreciate it. Thank you, Monster, for being here. Thank you, Jim, for being here. Yeah, you're welcome, Composite. You're welcome, Jack. Well, you're welcome, Nature. Well, I'm gonna post it on YouTube, guys, and thank you, Heather, for being here. I appreciate
I appreciate you. I really do.
anytime, and I'm always here. If you have any questions, you got me. So you're welcome, Lunatic. You're welcome, Jack. Thank you all. All right, I guess I'll see you on Monday morning. If I'm awake, you'll see me at 4 a.m. again trading. So I'll see you then. Thank you, guys.